All right, you're welcome to a wonderful day. And today we want to look into our weekly analysis. And you're welcome to DB Investing, our weekly outlook of the market. And I am no other person but Mr. Chedrak Dimabo. All right. My name is Tamunos Semyebi Shedrak or Shedrak Dimabo, as the case may be, whichever one is fine. So welcome to our weekly analysis, and here we want to delve into all that the market holds for this week and what we should be expecting this week. So let's go down. All right, so first of all, we want to take a look at the market analysis as per the fundamental and the technical. Of course, it is the blend of the two that gives us a right perspective in the market. So we want to have a weekly outlook of the fundamentals. And here we are just going to concentrate majorly on the high impact news. Is that okay? Just the high impact. We are not going to look at much of the medium and the low impact, because this week is filled with a lot of high impact news. So we want to see what is going to happen in the market this week based on the high impact. And without wasting much time, this is the fundamentals, and after the fundamentals, we're going to look into the technicals. In the technicals, we're going to have a rundown of Euro USD, GBP USD. We're also going to look at the GBP JPY, which is the pound yen, and then we're also going to look at gold, and then the WTI, which is a oil. So here, let's delve into our technical analysis. Sorry, the fundamental analysis first before we go to the technical analysis. All right, so today is being Monday. We are expecting a very high impact news by 2:45 p.m. and then the next by 3 p.m. All right, GMT +1. All right, and here what we are looking at is the final manufacturing PMI and the ISM manufacturing PMI. Of course, all of this has to do, the PMI data got to do with the manufacturing sector, how healthy the manufacturing sector is. Because before any investor we want to invest in any country or economy, they will want to check out all of this data. Is their manufacturing sector doing well? Is it healthy? Is it okay? All right, so this data is very key because it tells us how healthy the manufacturing sector is. And here we have the previous, and here we have the forecast, the economic forecast, and then we are expecting the actual. So what we are saying is that if the actual data that is released is better off than the forecasted, then it shows that the economy is doing well. Okay, the manufacturing sector is healthy, and so one may want to take a good decision that will actually influence the decision of so many investors whether to do business with that country or not. Is that okay? So that is why this particular data is very key. It looks at the health of the manufacturing sector. All right, on Tuesday, being tomorrow, we also have the CPI data month on month. All right, now the CPI data is very key because, especially for different countries, because it tells is called the consumer price index. It tells us how much it costs the consumer to purchase a particular goods or service. So if the CPI data is on the rise, it means that there is inflationary pressure in the system. So that is one of the data that the central bank of each country looks at to determine whether to raise interest rate or to maintain interest rate or to cut down interest rate. All right, so this data is very key because it is the key data that is used to monitor inflation. Okay, to monitor inflationary pressure in an economy. So that's why it's very key. And so we should watch out for it. That is by 7:30 a.m. tomorrow in the morning, GMT +1. All right, then by 3 o'clock here tomorrow, okay, we also have the Joe job opening. And the Joe job opening is actually, it tells us the number of jobs that are open All right. If the number is, so of course, in an economy, if an economy is very buoyant and doing very well and is healthy, there should be job opportunities. So this job open, it tells us the number of job opportunities. All right. And then on that basis, if the number of job opportunities on the rise, it shows that the economy is booming and I'll say more persons are being employed. Is that okay? And so investors will see that kind of an economy as an healthy economy, and that will actually boost the strength of that currency. So this is what we look at in that case. So we have the forecast, which is 8.4 M, all right, and then million, and then we have the previous, which is 8.49 million. So we are looking at that if the actual comes up better than the forecast, it shows that there are more job opens as per when weighed together with the forecasted, okay? And if peradventure the actual is even higher than the previous, it's even more positive. All right, so investors will look at it as a positive note for that of the US economy, that the US economy is doing great. So they want to do stuff with the US economy. All right. So that is it. And that will strengthen the US dollars. Now, on Wednesday, we have the GDP for the Australian dollar. And the Australian dollar, actually, this GDP data quarter over quarter tells us how healthy the economy is. Because if you want to know the overall state of a country, of an economy, just look at their GDP, okay, which is the gross domestic product. Okay, so we look at it. So if the GDP value is of course, the previous was 0.2%, and the actual, so the forecast is 0.2%. So if the actual is higher than the forecast, it shows that there's an improvement, all right, in the economy. It shows that the overall health of that economy of Australia is better off, is getting better and better. And so that will boost the Australian dollar, okay, the strength of the Australian dollar, and the investors will want to do business with it because it will be more alluring that, okay, fine, this economy is healthy, so let's push in our money to do business in that economy. So we are going to watch out for this. That is by 2:30 a.m. in the morning, GMT +1. All right, then by 1:15 p.m. GMT +1, that is in the afternoon, is going to be our ADP, which is the non-farm employment change. The non-farm employment change is actually an estimated value of the number of people employed in the US economy, or in the US, excluding the farm industry. Okay, so that is why it's called the ADP non-farm employment change. It's just that before we bring forth the actual, let's look at a forecasted or an estimated value, because that is the meaning of ADP. So if the ADP actually is positive, it's of higher value. For instance, previous is 192K, 192,000. Okay, all right. And now the estimated value, all right, or the economic forecast is 175K. Now, if the actual comes up better, okay, it gives us an idea that, okay, more persons are employed, though it's an estimated value. And so with that, one can begin to anticipate or forecast how the actual will be like, if the actual is also going to be better. Is that okay? So that's why investors also look at it, because this actually is a prelude to the NFP. All right. So the what we look at to decipher if NFP is going to be better is the ADP data. All right. And of course, this week again, we have a lot of interest in monetary policy news that is going to be showcased this week. For instance, the Bank of England is going to give us their monetary policy statement by 2:45 p.m. on Wednesday. And of course, here they will decide whether to maintain interest rate or whether to cut down interest rate or to increase interest rate. Is that okay? And so, if of course, this is very key, and they will influence the Australian dollar either positively or negatively depending on their decision. All right. And then by that same day, Wednesday, by 3 p.m. GMT +1, we have the service PMI, okay, for the US dollars. Okay. And this is a very key, important data that we have to look into. Okay, very important, because here we are going to see if the forecast, all right, is better, or the actual is better than the forecast. Okay, this particular service PMI is very key data that will move the US dollar in the short term. And then we also have, like the Bank of England, there's still their monetary statement the conference is going to hold, and so there they would decide that, look, just as I have earlier said, they will decide on whether to be hawkish or to be dovish, or in whichever case may be. All right, that if it is hawkish, it's going to favor the Canadian dollar in the positive direction. If it is dovish, it's going to favor, is going to go against the Canadian dollar in the negative direction. All right, then on Thursday, we are going to have the rates statement for euro. All right, so Wednesday for Canadian dollar, Thursday for euro, and there the ECB is going to, which is the ECB, is going to tell us what is going to happen, whether they are also going to maintain interest rate or cut down interest rate. But actually, euro is under pressure. Okay, under pressure in the sense that we're anticipating an interest rate cut. All right, yeah, we're anticipating an interest rate cut, and if that happens, it's going to affect euro in a great deal. So watch out for that, because euro is under pressure. Okay, because of course, I told you what actually determines interest rate cut is inflationary pressure. If the amount of inflationary pressure is high, the central bank of that particular country is going to determine or decide on whether to cut down interest rate, to maintain interest rate, or to hike interest rate. But right now, the inflationary pressure is actually high, and so we are anticipating a cut. Okay, interest rate cut for euro, and if that happens, definitely euro is going to drop, and then so that is just rate, and it means that the money levied on interest or whatever is going to drop, and so investors will want to dove more, and then so that is just it on that regard. And let's look at the case of on Friday. Because like I earlier said, for the case of European Central Bank, that's their monetary policy statement is very key. So let's watch it, because we have already the sentiment, forecast and analysts are anticipating an interest rate cut. Okay, so watch out for this. So, but how do we use this data? We use this data in such a way that, for instance, if we see a particular currency that has a very nice hawkish statement, or the economic data backing up that currency are quite positive, and then we see another currency that the economic data backing it up is negative, so we pair those two currencies together, and that is what we look at to trade. Is that okay? So we look at the one with an hawkish, more of an hawkish data that is backing it up, and then we go in favor of that particular currency. All right, so that is how we use the fundamental to assist our technical to do trading. Then on that same Thursday, we have the unemployment claim. Now, this is very key. I want to use this to analyze what is going to happen in NFP, because now we have looked at the JOLTS job opening. Okay, we look at the ADP. All right, now the unemployment claim. Let's look at this trade, all right, and synchronize this trade to enable us analyze what is going to happen on Friday as regarding the NFP. Now, if the JOLTS job opening is actually on the rise, okay, and that is positive, it's higher than forecast, and then the ADP data, which is the estimated value of the number of people employed in the US, is also on the rise. Now, we have a synchronizing a synchrony between the JOLTS job opening and the ADP data. Okay, so both are positive. Is that okay? Now, if the unemployment claim on Thursday comes out positive, by that we mean if the number of people coming in to fill an unemployment benefit form drops, it shows that the JOLTS job opening is positive, ADP is positive, and then unemployment claim also drops, which supports the JOLTS job opening. It means that NFP may be positive. Is that okay? Now, do you see the analysis, how we use all of this to analyze the data? In the sense that now ADP is positive, the estimated number of people that are employed in US, excluding the farm industry, and then JOLTS job opening is positive, All right. In other words, there are more jobs that are opened, and then the number of people that are filling in for unemployment benefit drops. It means that something good is going on in the US economy, and then it will give us a clue that NFP on Friday is going to be positive. But if the reverse is the case, then we can have a clue that probably NFP will not be favorable as per it's not going to be positive. Is that okay? So we should watch out for these three data: unemployment claim, ADP, and the job opening on Tuesday by 3 o'clock. Okay, these three data will give us a clue of what the NFP will do on Friday. All right, now let's come to Friday. All right, now on Friday we have the labor data for the NFP data. All right, and though we have for the Canadian dollar and for the US dollars. For the Canadian dollar, we have the employment change and unemployment rate. All right, and it's similar to their own NFP in the sense that there we look at the number of people that are employed. Like here, we don't have a forecast here, but we only have previous. So since there is no forecast, we use the previous to to weigh the actual. So here we have about 90.4K. So if the actual comes up higher than this, it shows that there are more persons employed as compared to the previous. All right. Then the unemployment rate, we have 6.1%. So if the unemployment rate drops, maybe it comes down to 6.0 or 5.9%, it shows that actually unemployment rate is number of people that are being employed is on the rise. Okay, and then unemployment rate is dropping. So that will be positive for the Canadian dollar. And then when it comes to the US, we have the average hourly earning month over month. We have the non-farm employment change and the unemployment rate. Now, this is how these three goes in. And the average hourly earning talks about their pay, like the salary. Okay. Now, if the salary of workers is increasing, that is positive. Okay. And then the number of people that are being employed, if it's also on the rise, is positive. Then, if the number of people that are employed is on the rise and the average hourly earning or their salary hourly is also on the rise, and unemployment rate drops, is very positive for the US dollar. That means that the US dollar will fly, all right, in a bullish direction. That means that currencies like GBP USD is going to sell, gold is going to sell, and Euro USD is going to what? Sell. All right, but now let's look at it this way. If the salary remains the same, like this is 0.2%, and their forecast is 0.3%, and maybe they maintain it at 0.2% less than forecast, and the NFP is positive and unemployment rate drops, it might affect the US dollar still positively. But if the salary is less than the forecast and unemployment rate is on the rise or unemployment rate is the same, okay, and then NFP is positive, it's going to affect the US dollars negatively. All right, so you understand all of this analysis, and that is that I've taken my time to do that of the fundamentals. So now let's go down to the technical so that we can blend the two together and then have a good bias in the market. So, all right. So let's see the technical analysis. Now, this is the GBP USD. All right, and we look at it, the analysis, our demand zones, plotting our demand zones from the 4 hours time frame. All right, so let's see what the market holds for us this week. All right, so I had to just go to the 1 hour time frame so that we can look at it in a more elaborate form. But these zones were plotted using the 4 hours, okay, to determine our weekly so that we can know what the market is doing. Now, if you watch critically, you will see that the GBP USD is just bouncing on a trend line support, you could see. And here is our demand zone, okay, we've plotted. And you could see what the market is doing, right? Yeah, so here is our demand zone, and here is our supply 1, 2, and so we have is our supply zone here. Another supply zone is up here. This is okay, another supply zone. Okay, now you could see what the market is doing, that currently there seems to be the market is on a fix. Right? What I mean a fix is that there is the market is just bouncing on the trend line support. At the same time, it is making a lower high. All right, so you could see that this market dropped down to retest our trend line, and on this zone, and then from this point it pushes up. But I'm anticipating that what my bias for the pound, the pound dollar is that it's a bearish bias. I'm expecting this market to break this trend line and then break this demand zone and then drop down to demand zone 3. All right. Yeah, demand zone 3. So that's what I'm anticipating in this market, right? So if you watch this market critically, all right, the market, this particular price level of 126899 is the what I use as the target point for demand zone 4. If it breaks this zone, all right, down, and then we have this particular level, breaks this trend line, and then this particular demand zone, then I'm expecting this market to ride down to the next demand zone level of zone 3, which is 1.25119. Is that okay? Yeah, 1.25119. And so that is what we are looking at. Okay. So here, this market is in a fix, is under pressure. It's going to range along this particular point until there's a breakout. So if it breaks out of this trend line, it's going to retest again on this zone. I'm expecting to break this zone and then push down to demand zone 3. But alternatively, if that doesn't happen, if you keep on building up on this particular trend line, which I doubt will happen, then if I break off this our zone and then break our supply zone to get to supply zone 1, which is this particular level. Is that okay? So that is what we are going to do on that case scenario. All right. So now if that is done, when we push on to the next state, okay? And that is for pound dollar, of what is going on in pound dollar, and then we break down to demand zone 3. Okay, so that's what I'm anticipating the market to do this week for the GBP USD. All right, but of course, there is a lot of high impact news that's going to occur in the market this week. So one, we have to be very careful. You know, the market, we can't say that we are 100% sure in the market. We deal with probabilities. Okay, if we are 80% sure confidence level, 70% confidence level that this market is going to act this way, so we're done with proper risk management, and then we push on in all of this case. So if it breaks this our zone, we wait for a retest and then we come in. Okay, and this is going to be a free ride down to this other zone level. So that's what we're expecting. So I'm expecting a breakout on this support, this trend line support, and then down. Okay, so because my bias for GBP USD is a bearish one. All right, now let's push in for Euro USD. Euro USD. All right, and let's look at it. Now this is Euro USD. You could see what's going on here. The same thing happened in Euro. Euro is also in a fix. You could see Euro is also in a fix. Okay, this is our zone. You could see it's just bouncing again on our, what's it called? Our trend line. Okay, bouncing, and then the same thing is happening it's making lower highs. Okay, while it's making higher lows. Okay, so now, is the market is in a fix here. So we're waiting for a breakout in this market. Meanwhile, it's ranging around this our demand zone. Okay, demand zone 5. All right, it's just ranging along this point. If you see it breaks it out, okay, and if you tie these points together, all right, fine. It's in a short time, it's making some up and down. It hits this point, drop. Okay, I'm expecting to do a kind of an upward move, which is doing right now, but it's going to still make another lower high. Okay, and push down again. That's how it's going to do until it breaks this zone. I'm expecting to drop down from this zone down to this particular trend line to retest this trend line again. All right, yeah, to retest this trend line again. If there is a possibility of it just ranging here. Okay, just ranging here until it eventually breaks this trend line, okay, and then pushes forward. But my bias again for this week is a bearish bias for Euro USD. All right, remember our fundamental, we said we're expecting a cut in interest rate or for the rate statement that is going to be made made for euro, that we are expecting a cut, an interest rate cut, and if that happens, it's going to affect the euro negatively. So I'm expecting this market this week to actually dove downwards. Okay, so that is it. So for now, because of that rate statement, all investors, their eyes is going to be on what is going to happen. So euro may not really make much moves. Okay, it might be ranging, waiting for the interest rate monetary policy to come out so that everybody will now know which direction to dove in, either here or there. But we have to still wait for that information to be released so that we now have a clear-cut direction of what we are to go, whether in a bullish direction or in a bearish direction. So that is what we are going to do in this game. But I'm expecting this a kind of the market doing some ranging around this point. Okay, respecting this zone, and but what I'm expecting is that for you to break this particular trend line support and then dove downwards. Okay, at least up to demand zone 2, this level. Okay, and if it breaks level, move further to demand zone 1. Okay, so that is my bias for this week for that of Euro USD. All right, and this is if you want more of it, you can go to our website www.dbinvesting.com. All right, the article is there of this analysis, so you can read it up. You can even download it, and then all right, and then go over it and again to help you, to guide you throughout the week on how the market will behave. All right, so now let's push on to the next. The next, we got to look at the GBP JPY. Okay. All right, let's look at the GBP JPY. Let's see what the market holds in this case. Wow. Now, this is GBP JPY. You could see GBP JPY has been bullish for quite, in fact, it is overbought, right? And you could see what's going on here. In GBP JPY, this is a very nice market, and you could see how the market is just bouncing on this our trend line support, right? And this is our supply zone 1, and this case, well, just as I expected, I was expecting that you can see this, it has made is starting a downward momentum, by it has made a lower high. So I was expecting it to break this trend line support, which it did. It has broken it and coming down to come and retest this our demand zone. I am expecting it to break this our demand zone. All right, because my bias for JPY also is a bearish bias. So I'm expecting it to break this our demand zone. And if it do, okay, or if it does break this zone, it's going to have a very free ride, a clean ride down to our demand zone 3. And getting to this our demand zone 3, which is at a level of 194.904. All right, we are looking at the demand zone 4 at a level of 198.827. If it breaks this zone down to this level, is going to have then it's going to move further to demand zone 2. So I'm expecting this movement to ride from demand zone 4, if it breaks it, down to demand zone 3, and then to demand zone 2. I'm expecting a clean ride, a clean sell movement. All right, yeah, in this market. All right, so looking at the high impact news that is going to show up, in fact, today, even this afternoon, definitely the ISM, the PMI data is also going to influence it a little. So this is my anticipation. So a bearish bias for GBP JPY. All right, so that is it. Now let's push on to gold. XAU USD. All right, let's look at gold. Let's see what the gold will do today, this week rather. Let's see. Let's see what gold will do. Just hold on. Let's see what gold will do for this week. Okay. Just want to look at gold. Let's see the analysis. Okay, here is the analysis. Nice one. For gold. All right, so now here is the analysis for gold. You could see now when I look at gold, in fact, all of this assets, sometimes, especially the ones that are associated with the US dollars, because that is what most times we look into, are just behaving alike. All right, so we have supply zone 1. Okay, this particular point, this is a very critical point in the market, and look at what the market is doing here, and then you could see how the market is respecting this trendline resistance. Okay, and then here again we also have our trendline support system, and then here underneath we have a demand zone, which is acting also as a very strong support system here. Now, here is the thing. Now, here we are also anticipating a breakout, but listen carefully. My bias in gold is a bit mixed, right? Reason is that it's a bit mixed. So I'm just expecting a breakout. This is where I'm expecting a breakout. Now look at this market here. Okay, if gold I'm expecting gold to do a little ranging around this point until there is a breakout. If it breaks out upwards, all right, break at this trendline resistance, I'm expecting it to push down to go and retest this supply zone. Okay. And if it breaks this supply zone upwards, then I'm expecting to push down to go and retest this supply zone 1. Now, but if you watch this critically, you will notice that gold did actually break out from this trend line, but there is a support, a demand zone, a support system here. So you see, immediately it hits this support zone, it pushes upward again. Let's expand it a little. Okay, now do you see what's happening here in gold? Immediately it reached this demand zone here, it spiked up. Okay, so the thing is this: I'm going to expect, before I will come in for gold, these are number 1, for a buy trade, I'm going to wait for gold to break out of this trend line resistance. Then I can go in for a buy up to this demand zone level, and then I will get out. Then I will wait for a breakout, breaks out, retest on this zone level, and then I will come in again and go bullish until the next zone level of supply zone 1. But again, if gold respects this trend line resistance, okay, and is unable to break it, okay, and then comes down and then break this our demand zone 4, then I'm going to go short down to demand zone 3. If it breaks this one and retest again, I'm still going to short it now to demand zone 2. All right, so right now gold is in a fix. We are waiting for a breakout, either upward or downward. Okay, and then we take our necessary action, what we are going to do in this case. Is that okay? All right, so now let's see the case of oil, WTI, which is our final one we're going to take for today, and then that is it, and then we go into the market and see and get a wonderful pips in the market. Okay, this oil, right? Yeah, this oil. So let's look at it, have an holistic view of oil. The same thing, you could see what oil is doing. Okay, yeah, so oil is also in a fix, it's in a zone, but I'm anticipating my bias in oil because of looking at our RSI. Our RSI is also oversold rather. So I'm anticipating that since oil is in this zone, I'm anticipating oil to push up, at least come and retest this trend line resistance up. Is at actually a trend line support, and then backed up by a demand zone, which also acting as a support here. And looking at our, what's it called? Our RSI is also oversold. So at this juncture, I'm expecting a kind of a buy movement, at least up to our trend line resistance point here. Okay, but if you succeed in breaking this our trend line resistance and this support level zone 3, then I'm going to still push on down to zone 2 in a bullish direction, in a buy direction. Okay, but again, if it ranges and then breaks this our demand zone 2, then we expect it to drop down to demand zone 1. Okay, so currently If it breaks this at demand zone 2 at 75.565, okay, then we know that we are going to push down more to 71.411. But my bias for oil is a bullish one. Okay, I'm expecting to do some retracement up again to hit this particular trend line resistance, and if it breaks it, to dove upward again, to push upward again, at least to supply zone 2. Okay, but at least the first move is that I'm expecting oil to rise at least to retest this our trend line resistance. Okay, there. All right. So in whichever case, we're expecting a breakout, either upward or downward. Because if you see all of this asset there in a fix, all right, expecting a breakout either upward or downward. So, ladies and gentlemen, okay, this is our weekly analysis for today. So we are just looking at all of the GBP USD. Okay, we looked at GBP USD, Euro USD, GBJPY. We also looked at gold and then the WTI oil. Thank you so very much, guys, and have a peaceful week. And that's it. Well, and I also tell you that DB Investing is one of the best brokers you can use, and you can visit us using our site, www.dbinvesting.com. Just go ahead, sign up with us, and then enjoy our analysis. This is not just only what we do, we also do daily analysis just like this on a daily basis. This is just a weekly rundown of what may happen with these few assets based on the fundamentals. Thank you so very much, and see you again same time tomorrow. Bye.